Let me ask you a quick question. Imagine handing a friend $500 today, letting them keep it for an entire year, and then being absolutely thrilled when they finally hand it back to you. Sounds a bit crazy, right? I mean, why on earth would you celebrate getting your own money back after making literally zero interest on it? Well, what if I told you that is exactly what happens when you get a massive tax refund?
Welcome to this explainer. Tax season is here, and for a lot of people it honestly feels like a second holiday season. You might be expecting a check for hundreds, maybe even thousands of dollars, and it's incredibly tempting to just treat it like a bonus paycheck, right? Like a sudden gift from the government. But our mission today is to completely flip that script. We're breaking down the math and the behind-the-scenes mechanics to show you exactly why a big refund isn't actually free money at all, and how you can take back control of your income.
Okay, let's dive into this. Here's our roadmap for shifting you from a passive taxpayer to a truly empowered earner. We'll start with the tax refund myth. Then, how withholding works. Third, tax credits explained. Fourth, taking back your paycheck. And finally, smart refund strategies.
Let's jump right into Section 1, the tax refund myth, reclaiming your interest-free loan.
So that excitement we all feel during tax season, it's often based on a massive misunderstanding. Think of it like a quick trip to the store. You're buying a $40 item, you hand the cashier a $50 bill, and they hand you $10 in change. Now, is that $10 a sudden bonus? Did you just make money? No, definitely not. It's just your own money coming back to you. Tax refunds work exactly the same way, guys. The government is literally just returning the change you overpaid them throughout the year.
Moving right along to Section 2, how withholding works, paying as you go.
So you might be wondering, how do we actually end up overpaying in the first place? It all boils down to tax withholding. This is the process where your employer takes money directly out of your paycheck and sends it off to the government throughout the year on your behalf. Then, at the end of the year when you file your taxes, the government basically sits down and calculates two absolutely crucial numbers: how much tax you actually owed for the year versus how much you've already paid through that withholding process. And this brilliantly illustrates how those calculations play out in real life. Let's look at Maria and James. Over the year, Maria had $4,500 withheld from her paychecks, but the IRS did the math and calculated she only owed $3,800. Because she overpaid by $700, the IRS sends her that $700 as a refund. Now, James, on the other hand, only had $2,500 withheld all year, but his actual tax bill came out to $3,200. Because he underpaid, he now has to write a check to the IRS for $700. The real financial goal for most of us should be getting as close to zero as possible, meaning you paid exactly what you owed, no more, no less.
All right, Section 3, tax credits explained, lowering your bill.
Now, withholding is really just one part of this whole puzzle. What actually changes the final amount you owe? You probably hear the terms deduction and credit thrown around all the time, but a tax credit is a uniquely powerful financial tool. Unlike a deduction, which kind of just lowers your taxable income before the math is done, a credit is subtracted directly from your final tax bill. Let's say your calculated tax bill is $3,000, but you qualify for $1,500 in tax credits. Boom, your final bill immediately drops to $1,500. And if your employer had already withheld the full $3,000 from your paychecks throughout the year, you are now getting a massive $1,500 refund.
There are quite a few common credits out there, particularly for families. The four major ones you absolutely need to be aware of are the child tax credit, the earned income tax credit, which we usually just call the EITC, the child and dependent care credit, and the American Opportunity Tax Credit. Qualifying for literally any of these can drastically alter your math, and frankly, it's a huge reason why some people end up seeing those really large refunds.
Now, what's really interesting about the slide is that big $2,500 figure. That is actually the maximum potential yearly value per eligible student for the American Opportunity Tax Credit. This specific credit is designed for the first 4 years of higher education to help you offset crazy costs like tuition and books. And get this, a portion of it is actually refundable. That means if it brings your tax bill all the way down to zero, you might still get some of that cash back in your pocket. If you are paying for college right now, understanding this credit is absolutely vital for your financial planning.
Another major one is the Child and Dependent Care Credit. This one is specifically designed for taxpayers who pay for childcare so they can actually go to work. To claim it, you generally just follow these 3 steps. First, meet the eligibility requirements, which usually means paying for the care of a child under 13.
Second, provide your care provider's information, including their taxpayer identification number. And third, you officially claim it by filing IRS Form 2441 right alongside your standard tax return. Pretty straightforward, right?
Which brings us to Section 4, taking back your paycheck, adjusting the W-4.
Okay, so knowing about these credits is great, but how do we actually apply this knowledge to our day-to-day lives? Let's compare two totally different financial mindsets. Worker A treats the tax system as kind of a forced savings account. They overpay all year long and are absolutely thrilled to get a $3,000 lump sum refund in the spring. Worker B, however, understands the math. They intentionally adjust their withholding so they don't overpay, aiming for that perfect $0 refund. Now, they pay the exact same amount of total tax as Worker A, but Worker B has access to their cash all year long. Worker A basically gave up the ability to earn interest on that money or use it to pay their monthly bills, effectively giving the government that interest-free loan we were talking about at the very beginning.
So, what does that actually look like in practice? Well, for Worker B, skipping that $3,000 lump sum refund means they gain roughly $250 extra in their paycheck every single month. I want you to really imagine that. Having an extra $250 of your own hard-earned money right now to handle groceries, pay down a stubborn credit card, or stick into a high-yield savings account that actually pays you interest. It's a real game changer.
And finally, Section 5, smart refund strategies. Make your money work.
Let's move to and see how this builds. Because look, even with the absolute best planning, sometimes a refund is just unavoidable. Or, hey, maybe you genuinely prefer the forced savings method. That's okay too. But if you do end up getting a refund, please don't treat it like found money to blow on a massive shopping spree. Be intentional. Here are 4 smart strategies to build some real wealth. Number 1, build an emergency fund to cover those unexpected expenses that always pop up. Number 2, pay off high-interest debt, like credit cards, which are secretly just draining your finances. Number 3, invest for the future by funding a retirement account, like a Roth IRA. Or number 4, invest in yourself by paying for certifications or classes that will drastically increase your earning power later on.
So, the crucial point is taking action. Right here, right now, here's your homework to finally take control of your paycheck. First, go look at last year's tax return. Did you get a huge refund? That's your very first clue that you're overpaying. Second, check your current pay stub to see exactly what's being withheld right now. And third, review and update your Form W-4 with your employer. The W-4 is the specific document that tells your company how much to withhold. Adjusting that little form is the key to immediately increasing your monthly take-home pay.
Well, we've covered a ton of ground today. Everything from busting the tax refund myth to totally mastering your W-4. Now the choice is entirely yours. Will you keep blindly giving the government a free loan, or will you take control today and start making your money work for you? Thanks so much for joining me on this explainer, and I will see you next time.